You can hear that I'm very much a South African, Chijioke. Just forgive me there. Kobo, not sense. What do you make of the bears and this bearish sentiment in the market?
Well, the president upbeat in the fixed income segment, strengthened by the hike in the benchmark interest rate, has put the equity markets in favor of the bears. As investor continue to seek for long-term safe assets over a volatile and high-risky stock, the bears in the market will definitely continue. In the fixed income market, the yields are currently still very attractive, and it's also supported by the hike in benchmark interest rate. So we'll continue to see that bearish nature in the in the equity market continue until probably at the point where the interest rate is dropped. But when it comes to hike in interest rate, the equity market suffers it the most, and you see people flying to safety, and flight to safety means going into the money market and the fixed income segment.
But which spectrum of the segment is most attractive? Because once we saw interest rates hike to 9.25% last week, we've seen variations in terms of the adjustments. Shorter term papers saw yields shoot up, longer term papers didn't. So where should investors be buying?
Yeah, currently, when interest rate of this nature is high, it is first felt in the shorter end of the market, and you see a situation where the longer end of the market becomes stable, because currently inflation is down, and the yield in the long-term market is still high. So you will see investors probably tilting towards the longer end of the market for now. But on the shorter end, we saw yield rising up because of the high rate, the cost of borrowing from the interbank money market, and as such, you see the bearish nature in the shorter end of the market to fund the money market obligations in the interbank market.
All right, there have been concerns, though, about liquidity in the market in general, and we were told that the squeeze has something to do with the federal access allocations. Can you explain what those are and whether or not this week things will look a little bit better?
Well, the federal asset allocation, the FAQ came in on Friday, but before the FAQ came in, we had seen a consistent shortfall in the interbank market. Market has consistently opened short, and because of the deficit already existing in that market, the FAQ inflow that came in had little influence in liquidity in the system. We only felt the impact yesterday as we saw rate dropping from 11.75 down to 10.5. But today we saw a gradual pickup as rate begins to go up to 11.25, 11% today. This is as a result of people positioning themselves for their cash reserve ratio, and also the outflow in terms of security sentiment and that of WDAS.
Let's talk about what's going on the Forex side. The Naira at 158, Naira 15 Kobo. It's even way beyond the weakest edge of the 3% band that's been set by the CBN. How do you see and explain this pressure?
Well, for that, it has to do with the supply and demand. The demand has consistently outweighed supply, and because CBN has for several reasons have failed to meet the demand. We see Naira shooting up, closing at about 15502. That's a 60 kobo depreciation as of where it closed last week at 154.42. This until CBN balances the supply end of the market, we'll continue to see such depreciation in the interbank market. As at yesterday, interbank market was at 157.92, but as at today, the interbank market closed at 158. It means the demand continues to be felt in the interbank market. Until this demand portion of the market is addressed, we will continue to see Naira continue to devalue in the market.